Good afternoon once again. We're going to continue our discussion on the creation of the statement of cash flows. By way of review, we said that in order to construct the statement of cash flows, we need the income statement of the current year and also the balance sheets of the current year and the previous year. Without this, without these statements, we cannot construct the statement of cash flows. And we said there are two methods in doing that, in constructing the direct and the indirect method. What we're using is the indirect method. And we're using a template, okay? We're using a template, a pro forma template in order to construct the statement of cash flows. So quick review, what we have done so far, we said in this template, we're going to classify the activities as operating, investing, financing. And then we went through the balance sheet to the relevant accounts and then sought to classify any change in those relevant accounts, whether it should be operating, investing, and financing, and then whether it's a source of cash or use of cash. So again, we said that for the asset side, an increase in the assets would mean a use of cash, while a decrease in the asset would mean a source of cash. The opposite is true with the liabilities and equity, such that an increase in liabilities and equity is a source of cash, otherwise it's a use of cash. Okay, so let's go back to and let's quickly review what we have done so far. So we start with the net income after tax, and we say that net income after tax is not equal to cash. So we need to adjust this by adding back any non-cash expenses or subtracting any non-cash revenues. In our case, we don't have any non-cash revenues, so we only add back the depreciation and amortization. All right, and then we went through the balance sheets. The balance sheet comparing. Okay, we said that if we take a look at the cash account, it went down by 70. So what's expected here in the pro forma template of the cash flow should be a negative 70. Okay, if this is not the figure that appears here, when we net the operating, investing, and financing, that means that there's something wrong or there's still some adjustments that we need to do. So first thing, the short-term investment, we said that this should be financing because it's interest bearing. Let me just, okay, so that we can see here okay. So this is financing. And since cash, short-term investment increased, it means that we used up cash. So this is a use of cash. Same thing with accounts receivable and inventories, but they fall under operating activities, okay? And then they both increase, so therefore they are uses of cash. Net plant and equipment increased also by 130, and it falls under investing, so it's a use of cash. For accounts payable and accruals, these are operating activities. They relate to operating activities, and they both increase. So when liabilities increase, they are sources of cash. That's why we have here positive. On the other hand, notes payable being which is interest bearing, so we put it under financing, and the increase is also a source of cash. So is the increase in long-term bonds, so also under financing, and it's a source of cash. Okay. Had there been any change in the common stock, it would also fall under financing, and then an increase in common stock would have been a source of cash. All right, and then the last item here is a payment of dividends. So the payment of dividends is a use of cash, and it will fall under financing. And when we summed up all of this from operating, investing, and financing, the total was an increase of 30,000. Okay, so cash flow provided by operating was 17.3. Cash flow used by investing is 130, and cash flow provided by financing is 142, with a total of 30,000. The total should be a loss of decrease in cash of 70. So we are overstated by 100. And last time we said that we do not remove this, the 100, just because it matches the overstatement does not necessarily automatically mean that this is the adjustment item. This is needed, okay? This is this should be added back to the income statement, to the net income after tax. So where is the discrepancy coming from? That's the question. If it's not the depreciation and amortization here, where is it coming from? Okay, it's coming from this account, this one, the net plant and equipment. That is where the problem lies. Okay, why? Okay, if what we were using as a comparison was the PPE at cost, the property, plant, and equipment at cost, then it would have been correct. The difference between them would have been the amount invested. Okay, if this was property, plant, and equipment. However, this is net. So let's write first here. Okay, how do you get the net value? So property, plant, and equipment. So this is a bit of a review of your accounting. Okay, how do we get the net value, class, in accounting? Would you know? Any suggestion? When we have this PPE and then at cost, okay, at cost, it means that what the amount that was bought, the amount that was invested in is the same amount that will appear here. Okay, all right. Rafi, subtract what? Subtract what? Asset and liability. Okay, thank you, Sherwin. But that's not what we're. Let me repeat my question. So we have property, plant, and equipment. How is this converted to a property, plant, and equipment net? That's my question. How do you convert or compute for the net? Do you recall your accounting, your basic accounting class? Kasi kung ang given, if what was given was PPE net, okay, then this would have sufficed already. If this were the figures for PPE net, then okay na to. No? We would have gotten the correct answer, the correct net amount here. But it's not. What we're given is net. And when you're given the net property, plant, and equipment, you cannot just subtract this. You cannot get the difference. You have to know the flow. Okay, so all right, Alexa, kindly share your answer to everyone, please. Okay, Alexa, could you share your answer to the class? Meron pala ditong answer, si Alexa. Accumulated depreciation. Okay, which is correct, no? So let me go back here to this sheet. So you have property, plant, and equipment at cost, and then you subtract from here your accumulated depreciation to get your PPE net. Okay, so what's given us is this one, which means that we have deducted there the accumulated depreciation, all the depreciation expense that have been incurred throughout the years, throughout the life of the asset. Okay, so this is your 2021, okay, and this is your 2020. What we're given is this one. So let me just equate that here. So this is 1,000, and this is 870. So what we're given is here. So the difference here, will not tell us how much was invested. If this was given, if these figures at cost was given, the difference would have given us the what was invested by the company. And so because of this, we will have to make some adjustments. Okay? If you recall from your accounting, just a little bit of a review in accounting, if we were looking at PPE net, okay, we can have a T account for that. Then we have this beginning value. And then what are the adjustments to the net property, plant, and equipment? We have here acquisitions. Acquisition, or the value that was bought. Okay, and then we have here depreciation expense. And then we have here disposal. Disposal is any fixed asset that was sold by the company. So that will be a deduction. As you recall, this is your debit and this is your credit. Okay, so this is how PPE moves, how it is affected. And then we now have here the ending value. Okay, so the formula actually here is beginning value plus acquisition minus depreciation minus disposal to get the PPE ending. Now we need this because we have this formula, we have this value. This is our beginning balance. We have now our ending balance. So we need to determine, we have the beginning, we have the ending. We know depreciation. We need to compute for the acquisition because the acquisition is the amount that was invested by the company. And if there's disposal, we need also to show this, the disposal. So let me write here. Let me say note 1, computation of investment in PPE. Okay, so that's what we need. We need to compute for the investment in PPE, and we need to put it here. Okay, so I'm now saying that this one is wrong. 130 was not really the amount invested. How do I know? Because we're using net plant and equipment. We don't have here, we're not given, and I deliberately deleted it because I want us to be able to still come up with a statement of cash flows even if we don't have the PPE at cost. Again, class, let me repeat that. If what we're given is PPE at cost, supposing this is PPE at cost, okay, then whatever the difference here, we would have placed it in investment, and that would have been the correct one. Okay, so but this is not PPE at cost because what we're given is PPE net. So let's see how, let's come up with a flow. Okay, so here we have PPE beginning. Okay, so that's where we begin. And then we add, what we add is acquisitions, right? Acquisitions. And then we also subtract depreciation, and we also subtract disposal. Disposal means assets that were sold to get the PPE ending. Okay. So let's set up now our computation. We know the beginning value. What's the beginning value of PPE, class? Could you kindly chat, please? In the chat box. What's the beginning value of PPE? Kindly answer in the chat box, please. Okay, what we're doing now is we're computing for this one, the acquisition. We need this because the acquisition is the amount of capital assets of PPE that was invested in by the company, which is not 130. It's not 130. Why? Because we're using here the net. Okay, and we don't really base it on the net. If this was at cost, then we would have the correct figure. Okay, how much is PPE beginning? Net. Okay, so sorry about this. This is net PPE. My mistake. Net PPE and then net PPE beginning and net PPM. Okay. All right. Thank you, Sherwin. Yeah, you're correct. 870. Yeah, we're given that. This one. From the balance sheet, this is net PPE and the beginning balance is 870. Okay, so let's just copy that. It's equal to 870. I'm just going to link it there. Oops, I lost it. Equal to. Equal to 870. There. Okay, acquisition, we don't know. We don't know acquisition. That's what we're going to solve. Okay, and then depreciation is how much? We have the depreciation for the year for 2021 and it's 100,000. So I'm going to link it here. Equal to F14. And then it's a negative because we're going to deduct that. Disposal, there's no information about that. If we were given the information that disposal was at 50,000, then we would have written here minus 50. Okay, so that's an example. If we were informed that there was a disposal of 50,000, it means assets, capital assets or PPE were sold, then we would have also deducted that here. But since there's no information about it, so let's just put 0 there. Okay, no deduction. All right, therefore, the net PPE will just be the sum. Okay, it will be the beginning plus acquisition minus depreciation minus plus this depreciation plus disposal. We're adding because it's already negative here. Okay, but if you want this to be, if you want to put this to be a positive, then you should make the formula negative. Okay, I already made it negative so that we can just add. Okay, add. Okay, so kindly chat please if up to this point we're clear. I will appreciate class your feedback if so far you have been able to follow along so far. Okay, good. Thank you so much. Okay, let's wait for a few more seconds. Some of you I know are also writing on your own Excel worksheet. So let's give ourselves around 1 minute for you to write what I've just written here. Okay, good. Thank you so much for your feedback. All right, now our net PPE end is equal to 770. Now my question is, what should be the net PPE ending? Kindly chat, please. What should be the value of your net property, plant, and equipment? Okay, I think Aura. Okay, let's wait for the others. Thank you, Michaela. All right, thank you, Raf, John. Thank you. You're correct. So it should be 1,000 class. Thank you, Alexa. Big salamat. Okay, thank you for the feedback, guys. And you're correct. It should be 1,000. But here we're getting the value of 770. Okay, let's see the, yeah, good. Thank you. Thank you so much, class. I appreciate the active participation of most of the class members. All right, that's good. The ending value we know to be 1,000. That one we don't dispute that because that's already given. That's also part of the balance. That's a balance sheet. But it's 770 here, right? So which means that there's a lacking value and the only unknown here is the acquisition. So can you already identify, can you already solve that just by looking at it? What should have been the acquisition, class? And yes, Negative. Okay, negative, yeah, because, but as far as the net PP is concerned, okay, yeah, Michaela, you meant this is a use of cash, no? But as far as this is concerned, as far as the net PP is concerned, it is an addition to the balance, okay? So it's positive here, okay, because what we're counting here is the PPE, okay? But when we put that into the template for cash flow, it should be negative. Yes, you're correct. Thank you. All right. So 230, no? This is 230 class. Okay, and let me just add one decimal place here so that, okay, they're all the same. So the acquisition was not actually 130, it was 230. Okay, so we only had here 130. You know why? It really was the depreciation. However, not in this sense. The depreciation should have been added to your net PPE. Okay, had we included depreciation here 130 plus 100, this would have been 230. Okay, so that was the so it was depreciation all along, but not in this context. Okay, it was in the net PPE. Okay, so the acquisition was not 130, but the acquisition was 230. Okay. All right, let me pause for a while. No? Okay, I will change this in a while. Okay, is that clear so far? So we now understand that the acquisition, the investment in PPE is not 130, but rather it's 230. So may I request your chat, please, if that's clear to you. If we understand that the investment is not 130, but rather 230. Okay, good. Good. Thank you. Thank you, class. Okay, good. Appreciate your feedback. Although hindi tayo nakaka 100% na feedback, no? I would that we had 100% feedback. Okay, so let's continue. Now what we're going to do is sometimes the computation can be, this is an easy computation, but sometimes it can be quite difficult. So let's remove this. And may I ask you please, once again, kindly chat, had you used the goal seek function of Excel before? Yes or no, please? There's a function in Excel, it's called goal seek. Let me write that. Goal seek. And I'd like to know if you have used this before. Have you used it before, class? No? Okay, thank you. About the others, please? Yes or no lang, guys? I hope everybody will respond. Okay, good. Okay, thank you. All right, no, okay. Did I get a yes here? Am I seeing a yes? All right, that's good. This is an opportunity for us to learn. Okay, so let's use goal seek in order to compute for this. Okay, and for more complex problems, okay, goal seek really comes in very, very handy. Okay, this is just a simple computation, and we easily computed for it just by looking at it. We know that the acquisition is 230. But let me just illustrate a tool in Excel which you can use when you're solving unknowns like this. Okay, so we know that this one should be 1,000, right? But it's 770. So what we want Excel to compute is this acquisition. How much did the company invest in PPE? Okay, so where do we go? We go to the data tab. Okay, if you go to the data tab, click that in Excel, you will find here, it can be in the forecast function, but please look for the what if analysis. Okay, so this is the what if analysis. And if I click that, I'll have here three functionalities: scenario manager, goal seek, and data table. These are all very important functionalities. And this is used for, do you know the other name for what if analysis? Can anybody chat if you have encountered this? an analysis that asks the question, what if? So what if, so it seeks to answer, what if this one is like that? What would have happened to this one? Okay, this is called also, anyone? What's another name for this? The what if analysis. It's called letter S. Experimental. Thank you, Raf, but it starts with letter S. S and then E. Scenario manager, Lance. Okay. Scenario manager is useful in this analysis, but we call it SE and then N. Again, it's similar to what if. What if this amount, this figure is like this? What would have happened? It's called SEN, sen. Okay, it's called sensitivity. Okay, may sumagot ba? Okay, thank you, Raf. Yeah, that's correct. Nicole, thank you. It's called sensitivity analysis. Okay, so remember that that's a business term. That's a business badge term. Sensitivity analysis asks the question, what if? And it's the same thing here. Okay. What if the NPPE ending is 1,000? What would have been the acquisition? Because now we don't have a value here. We could, of course, try trial and error. Is it 5? Okay, it's not 5 because this is only 775. Is it 100? It's not 100 because it's not equal to 1,000. Okay, so how do we answer that? We're going to make use of the goal seek. So what if analysis, and then let's click on to goal seek. Okay, and then there are 3. This is our dialog box, and there are 3 parameters here that we need to answer. The first one, the first and the third one, you notice they have icons. You might have a different icon in your case. Okay, it could have, the default is a spreadsheet. I don't know what happened here, why it changed, but in your Excel, this must have been a spreadsheet. So when you have the spreadsheet here, it means that you don't type anything here, but rather you link it to your model. And then of course, class, when you use goal seek, dapat nakaset up na yung model natin. Kasi yung model na yan, it will only work if andyan na yung formula, andyan na yung mga inputs, etc. Tapos papapalitan natin kay Excel yung mga gusto natin papalitan. Okay, so what's set that cell? Where should we link this? Okay, kindly chat in the chat box. Where do you think should this be linked? So remember, ililink natin yan sa model natin. Saan dapat natin siya isa-set, ililink? The name itself is Lens2. A very easy understanding of that. Set cell. Ano ba dapat ang isa-set natin? And then to what value? So obviously, set cell will be what, class? Okay, I have an answer here. Okay, set cell, class. Set cell should be what? Anyone? Anong gusto nating iset, class? Ano yung value na alam natin? So set cell should be, class, you can easily answer that. Konti lang naman yung model natin, no? Acquisition. Kasi to what value? Masasagot ba natin yun? Set cell, if we set acquisition to what value? Dapat alam natin tong value na to. Okay,
1,000.
Yeah, so what do we set? Okay, so nag-answer dito si John, ano? Tama, net PPEN, no? That's correct. So set natin si net PPEN. So set net PPEN. So I'm linking it to net PPEN. And then to what value? So as I said, class, this is not linkable. We should type that. Set it to 1,000. Di ba? Ang sinasabi natin, yes, correct. Thank you. Set yung net PPEN to 1,000 by changing what cell, class? By changing what cell? Obviously, it should be, yes, correct, acquisition. No? So dito. Okay, and again, dapat nakalink delete natin dito. Okay, so this tells us, guys, that the model should already be written. No? Nakaset na yung model natin bago mag-work. So let's click OK. Okay, let me just Control Alt print screen. Okay, all right, there. Okay, nag-iterate si Excel hanggang nag-convert yung answer natin sa 1,000. Okay, Control V. All right, so this is our, in case I'm going to share this with you, if you want to have a copy of this. Okay, so that you know paano kayo compute itong acquisition natin. There. Okay, let me pause for a while. Okay, and then kindly chat, please. Yes, if you have, if you were able to compute for 230 using the goal seek. Okay, good. Thank you. Let's wait for the others. Goal seek is especially in really complicated problems, in complex problems. It really works well. Okay, for this one, very simple lang siya. In fact, the truth is we need not have used goal seek with this one because obviously the acquisition is 230. But just to increase your knowledge or your acumen as far as Excel is concerned, I throwed in this lesson about goal seek. Okay, how about the others? I'm only having a few responses from you. My question is, were you able to follow along? Did you use goal seek in order to compute for your acquisition? So kindly chat, please. So if there are any questions, please feel free to unmute yourself, raise your hand so that we can address your question. Okay, a few more seconds. We only have, yes, Julio, please.
Sir, can you repeat po because I got disconnected?
Okay, saan? Do you have this?
Yes, sir.
Already?
The go seek po.
Okay, sige. Let me repeat the goal seek. Thank you, Julio, for your question. Okay, so initially ito, di ba, hindi natin alam to. We don't know this. But you have to have this model already. You have your beginning balance, and then we add acquisition because it adds onto your PPE, net PPE, and then we have to subtract the depreciation, and then if there's any disposal, we have to subtract that also, and then we added all of these items here to get 770. And we know that net PPEN is 1,000. How did we know that? We have the balance sheet here. This is the beginning, this is the ending. So how do we let goal seek solve for this one? All right, we go to data. So under data, you have here your what if analysis. Okay, what if analysis, then we have here goal seek. So this is goal seek now. So there are three parameters here. Number one is set cell. Set cell to what value? So we link this to the cell that whose value we know. Okay. In this case, alam natin na PPEN is 1,000. But it does not appear here kasi may kulang pa sa model natin, kulang pa yung acquisition. Okay, so set cell natin. Okay, set cell to this. Okay, so let me, oops, delete this first. Set it to this one, okay? And to what value? Now there is no icon here, there's no spreadsheet icon. So this one we have to type. We know that the ending value is 1,000. And then by changing what cell, we change acquisition. This is the unknown. So we want Excel to determine what this value is. Changing cells means it will iterate. It will try several values. That's why when we click OK here, there, what is it doing? It's actually iterating there. And it came up with 230 and the net PPE, and as we wanted it to be, is 1,000. Oops, wala. Sorry, dapat na okay ko. Again, what if analysis, goal seek, set cell at ending to what value at 1,000, and then changing cells is your acquisition, then okay. Okay, so okay na tayo. Huh? So it's 230. All right, I hope everybody got it. Okay, so now we can now change our pro forma template for the statement of cash flows. So this is not 130. This should in fact be negative. So based on the acquisition, oops, negative. Okay, so negative, wait, Control Z, there. So this is negative this amount. Okay, negative 230. Okay. All right, negative 230, and if we check the balance, okay, there you go. So we now have the correct balance. This now jives with our cash balance, the change in our cash, negative 70. Okay, so that's just to summarize. Okay, let me copy this. Control C. Okay, so these are our cash flows: 17.3, negative 230, and 142.7, coming from operating, investing, and financing activities respectively. Okay, so this was cash provided by operating activities. This is cash used by investing activities. And this is cash provided by financing activities. Pag provided, it means source of cash, positive. And pag used means use of cash, negative. Okay. So we're now ready to create or write our, let me put the sensitivity here. So let's now write our statement of cash flows. Let's write it now. Let's formalize it. Statement of cash flows. And what's the company? Advanced Technologies. Control C. Okay, you may write in the place where I'm writing plus, so that we'll be in the same position. Control V. Let me put it here. Okay, so this, I'm starting writing at, this is T22. Okay, you may wish to do that. Okay, and then this is for the period December 31, 2021. For the period covered, so this is for the whole year. Okay. Okay, so we start with the net income after tax. Whatever we did in our in our pro forma, we're going to do here. So our net income after tax, okay, maybe we can net income after tax, and this is equal to, we get this from our income statement. This is our net income after tax. And we said that we should add back depreciation, add depreciation and amortization. This is equal to, I'm going to link it to our income statement. Depreciation and amortization is this one, 100. Okay, so therefore this is now our net cash flow. We have converted our net income after tax into the net cash flow. Bottom, okay, is equal to, get the sum. Okay, 237.1. Okay, let me give you a few seconds to follow along. If you're done, class, kindly please chat yes. If you're okay, so that I know when to continue. Thank you, Rafi. Let's wait for the others. Let's give a few more seconds to your classmates. Okay, good. Thank you so much. I hope the others are following along. Are there any questions before I proceed? Okay, good. So after the net cash flow, so we now write here adjustments in changes in working capital. Okay. All right. So what are the changes in the working capital? We have it here actually. Let me remove the bold here. So let's copy this, Control C, and then Control V. So we have the increase in accounts receivable, increase in inventories. Okay, we also have this, Control C, Control V. Okay, so these are the adjustments in the changes in the working capital. So our increase in accounts receivable is, so this one. Okay, I'll just copy down. So I'm just copying this from the template. So it's very easy now to construct the statement of cash flows because we already have the template. Okay, we can just copy from that. Okay. All right. And then I put here an underline. And then I can now add this, the net cash flow, plus the changes in the working capital. Okay, we can sum everything. Sum the net cash flow and then the changes in working capital. Okay, and this is 17.3. And that's the one in the operating activities class, 17.3. Okay, once again, let me pause for a while and allow you to give you time to write. And when you're finished, class, please chat yes so that I know if I can now continue. So the template is really helpful, especially when we're finalizing the formal statement for the statement of cash flows. You can just copy from the template the increase or decrease and the amounts. Oops, sorry class, no? I'm missing a, okay, kindly insert here. My bad, my apologies. So this should be cash provided by operating activities. So we have to have that title and then I'll underline it. No. Okay. How did we get 17.3? Okay, 17.3 is the sum, sinam natin, the net cash flow. Kasi the net cash flow is your net income after tax plus depreciation, which is actually what we did here. But dito kasi sinam up natin lahat to. We just gave this a name, net cash flow. And that should agree with your operating activities. Okay, so kindly chat please if you're done. Oh, kasama yung net cash flow. Okay, kindly chat please if you're done, class. Okay, thank you. So waiting for the others, please. Okay, good. Thank you so much. Thank you everyone for your responses. I appreciate that. Okay. All right. Let's now go to the next one. So let's just copy this. Control C, and then let me put it here, Control V. So this one should be cash flow. Let's put here cash flow. Cash flow provided by operating activities. Cash flow here, it's not provided, but rather it's used, right? And not by operating, but rather by investing. Okay, cash flow used by investing activities. All right, so it's this one. Okay, and it should not be any more increase in net plant and equipment. Okay, because the increase in net plant and equipment is negative 130. So we should write here increase in, I'll just use PPE, okay? Increase in, okay, let me write property, plant, and equipment. So it's the increase in PPE itself, not in the net plant and equipment. And this is equal to, okay, it's here or here. I'll just copy, no, I'll just copy this one. Okay, so notice you have on this side all the operating, investing, and financing activities totals. We're putting it in column X in one column. So for investing, there's only one. Okay, and then let's just copy this again. Control C, Control V, because it's the same provided. Okay, F2, and then let me put here financing. Okay, cash flow provided by financing activities. Okay, and then we're going to copy. We put everything here. Okay, so this one, Control C, short-term investments that will form part of our financing. Control V. And then we also have here the notes payable and long-term bond, and also payment of dividends. Let me just copy everything. Control C, Control V. And then let me just put this together. Okay. And then let me copy the amount. I'll copy it here on column W. So for short-term investments, it's this amount. For increase in notes payable, it's 50,000. For long-term bonds, 170. And for dividends, it's 77. Okay. All right, then we add this. It's equal to sum. It should give us the total for financing. All right. Let me give you a few seconds to update your statement of cash flows. If you're done, kindly chat clear, please. I think I got lost for a bit. How did I get negative 30? It's here. What we use in investing, but we computed for this 230, right? So yung 230 here is, we took it from the template. Diba sa investing, ito siya, 230. So I just copied it. Because we have done this already, diba? We have already done the template. So we're just using whatever value we got in the template. Okay, thank you for that question, Alexa. Okay, any other questions, class? Okay, and once again, may I ask you to please chat if you have done, if you are able to follow so far up to our financing activities. Okay, thank you. Let's wait for the others. Only 2 have responded. I hope I get more than 20 responses. Okay, very good, very good. Salamat class sa feedback, salamat sa pag-participate, salamat sa pag-focus ng attention. Okay, that's good. Okay, so we can now add this class. Okay, I place a border here, and then we just sum this up. Sum of all of this, the three components of our activities. Operating, this is operating activity, this is investing, and this is financing. And we get negative 70. So this is our decrease in cash balance. So this was the decrease, right? So we were able to account for the decrease in our cash. All right, and then we add cash balance beginning January 1, 2021. And then we have cash balance December 31, 2021. Okay, our cash at the beginning was okay, 80. Okay, so we add the two now, the decrease in cash balance plus the 80, sum this up to get the 10, which is the ending cash balance. Okay, so once again, class, I'll give you a few seconds to complete your statement of cash flows, the formal statement of cash flows. So this is definitely to be included in the exams. So make sure you understand how to prepare this. All right, if you're done, kindly chat, please. Okay, thank you. Let's wait for the others to key in their responses if they have completed the statement of cash flows. So we were able to show the start of cash balance and then its ending, and then the increase or decrease in cash and where it came from as far as operating, investing, and financing activities is concerned. So the key takeaway here also is that when you're given net property, plant, and equipment, you have to solve for the acquisition. But if you're given property, plant, and equipment at cost, then no need to compute for the acquisition because the difference will be your acquisition. Okay, good. All right, so that completes our exercise, our activity on the statement of cash flows. Okay, so let's proceed now. Let's move on to the other measures here. Okay, all right. So we have here some very important measures like net operating working capital or your NOWC. Then you have your TOC, and then we have the investment in TOC, and then the NOPAT. So we'll strive to reach up to the NOPAT here. Okay, that's where the other section ended this morning. So let's see. Okay, first we define the net operating working capital. Let me just define to you some terms used. So when we talk about working capital, okay, working capital is, okay, WC, is actually, this is the term used to denote your current assets. Okay, so if you have net working capital, that's actually your current assets minus your current liabilities. So that's net working capital. Now, in this case, it's not net working capital, it's net. We have here the presence of the word operating. Okay, so we're including operating and then working capital. So this is your NOWC. Okay, so what's the difference between net working capital and the net operating working capital? Well, of course, obviously, it's the word operating. But let me explain that by going to our balance sheet. Okay, so this is our balance sheet. And then this is our total current assets. Okay, so we're defining the net operating working capital, which is equal to the operating current assets minus the operating current liabilities. Okay, so the presence of this operating here indicates that our current assets should be operating also, and our current liability should be operating, as distinguished from your net working capital, which is just current assets minus current liabilities. So yung net working capital kasi natin, kasi wala namang descriptor dito na operating. No? So we just subtract current assets and then current liabilities. But what we're interested in here is NOWC. So how do you compute NOWC? If we take a look at the current assets here, you have cash, short-term investments, accounts receivable, and inventories. Now of this, okay, cash will form part of your operating working capital. Okay, short-term investments will not, because this is interest-bearing. Kapag interest-bearing cash, hindi siya pumapasok sa operating. And then accounts receivable is okay, and then inventories is okay. So of all of these 4 items, your cash and cash equivalents, not including short-term investments, accounts receivable is included, inventories is included for your operating current assets. Okay? And then we will subtract the operating current liabilities. And operating current liabilities, let's go down. What will be your operating current liabilities? Accounts payable is okay. Accruals is okay. Notes payable, as the name suggests, because this is interest bearing, so this will not form part of your operating current liabilities. So for operating current liabilities, it will only include accounts payable and accruals. Okay, so with that, we're now ready to compute for our NOWC, our net operating working capital. So for 2021, first is our operating current assets. So we'll just sum our cash, comma, and then our receivables and inventories. Okay, so there we go. So this is your cash. Okay, let me increase the size. So this is the sum of your cash, receivables, and your inventory. Okay, so actually we can copy this to the right. Okay, because of the position of your 2021 and your 2020 figures, they're adjacent. Okay, so this is 2021. And then we can now compute for your operating current liabilities, which is just the sum of your accounts payable and your accruals. There, the two. Enter. And then we copy this to the right, which is the sum of your accounts payable and accruals for 2020. So having computed for the operating current assets and operating current liabilities, we can now compute for the net operating working capital, which is just the difference between the two. And then we copy this to the right. All right. So let me give you a few seconds to work on that. And then when you're done, kindly indicate Again, sorry for asking this question because I want us to be on the same page. Okay, I'll wait for your chat to indicate that you have computed for this. Okay, a few more seconds, class. For the others, if you have any questions, please feel free to raise your hand or just unmute yourself, and I give you the floor. Okay, Rafi, what's your question?
Sure, would it be okay if you can show the formulas again for
Okay,
operating for like the whole table there?
okay, sige. This one. Okay. So these are the formulas of these cells. This is 2021 and this is 2020. Okay, any more questions, class? So I assume that you're able to follow. Okay, these formulas are pretty straightforward. Okay, if we understand what operating current assets means, okay, let me just have a review of that. Operating current assets will not include any interest-bearing asset. In this case, it's short-term investment. So we will not include that. So what's included only in operating current assets? It's your cash, your accounts receivable, and your inventories. And then you subtract from that your operating current liabilities. So for your operating current liabilities, it will not include notes payable because this is interest bearing. Okay. All right. So let's move forward. Now you can see here that the company is provided with this working capital worth 796.2 thousand. Okay, in 2021, there was an increase from 2020. So operating working capital was increased by around that's 33, no? 30 point something or 29 something, 29,000 something. So that there was an increase in operating working capital. All right, but the capital provided to management is not only operating working capital. You also have long-term assets being provided to management. Okay, so what's the working asset? That's now your net plant and equipment. Okay, so we now have what we call TOC. This is now total operating capital or total net operating capital. It's the same. You can call it total net operating capital or total operating capital. So how do we compute for the total operating capital? It's just your NOWC and then your net plant and equipment. So our net plant and equipment here is, okay, it's 1,000. You can copy this to the right. Okay. Therefore, our TOC is just the sum. Okay. All right, once again, class, I'll request for your feedback if you're able to follow. Yes, Julio?
Sir, is it okay if you show the formula?
Formulas, okay, sige. Okay, thank you for the feedback. All right, so let's proceed. Now we have the investment in total operating capital. So what do we mean by this? From 1516 in 2020, or at the beginning of the year, it became 1796, right? So the company invested more in operating capital. So let's just compute for that. So it's equal to TOC 2021. We have it here. So we're just linking it to 2021, and TOC for 2020 is this amount. Okay, so the amount invested is the difference. By how much did operating capital grow? Oops. Hmm. Okay, so the investment in operating capital was 279 or approximately 280. Okay, so operating capital grew by around 280. Okay, clear so far, class? We're just getting the difference between these two. So the difference between these two is 280, and that's the investment in TOC. Okay. All right. So we come to our last portion here. We would like to get the difference between NOPAT. Okay, we have here net income after tax versus net operating profit after tax. Okay, the difference here is that lies in the operative word. If you were operations, if you were management, you would want to be a judge. You want to be evaluated using NOPAT, operating profit, and I'm going to show you in a while. Okay, so we know net income after tax. You can just get the figures from our EBIT here. Let's just copy our EBIT here. Okay, I'm getting EBIT of 2021. Okay, and then interest, I'm going to copy down because the next item there is interest. Okay, so all right, so the difference between this is this minus this. EBIT less interest is 195.8, and then we multiply this with the tax. This times, I think we gave a name to it, tax rate. Okay, so that's 58.7. Therefore, our net income after tax is this minus this. Okay, 137.1, which is this one. That's our net income after tax, 137.1. Okay, so we did what was the income statement. Okay, questions so far, class? Questions so far? Okay, good. All right. So we now go to NOPAT, net operating profit after tax. Okay, net operating profit after tax. So NOPAT, we start with the EBIT also. So let me copy the EBIT. And what's the difference between NOPAT and net income after tax? The difference lies in the financing cost, this 88. Because we said that this is operating profit, therefore we should not load to it the financing cost. Why? Because operations will not be responsible for the incurrence of interest expense. Okay, imagine if finance borrowed a big amount and the interest expense is 1,000 here. So if we subtract 1,000 here, it will wipe out all the earnings of your operations, which will not be fair when we're trying to assess operations, right? Kasi hindi naman, they're not responsible for the interest expense. That's the function of finance. All right. So in computing for NOPAT, we will assume that there's no interest expense. So that's just the assumption. There is really an interest expense, but when we're computing for the NOPAT, we're assuming that there's no interest expense because we don't want to charge operations with the interest expense simply because they're not responsible for that. Okay? Diba parang fair lang, no? I-charge mo ko kung ano dapat yung ma-charge sa akin. All right? Therefore, our EBIT, our EBT will now be equal to your EBIT. Okay? Our earnings before tax will be the same as your EBT. So our tax then will be 283 times your tax rate, which is 30%. Control Enter. Okay, and then we subtract. Okay, so our NOPAT is 198.7. Our NIAT, our net income after tax, is 137.1. So it turns out, of course, as obviously, that our NOPAT will be higher as compared to net income after tax. This will only be equal if there's no interest expense. If there's no interest expense, then your net income after tax and your net operating profit after tax will be the same. Okay, but this company has interest expense, they have a debt. No? So your NOPAT will be higher than your net income after tax. And by how much, class? If we get the difference, okay, it's 61.6. Now, how come it's only 61.6? Isn't it that that we didn't, it should be 88, class? Shouldn't it be 88? Shouldn't the difference between NOPAT and NIAT be 88? How come it's only 61.6, class? How come? Any answers, guys? Why is NOPAT now only higher than net income after tax by 61.6 and not 88?
Use a tax, sir.
Yes, okay. So the difference in tax is this one. So that's 58.7 minus 85. Okay. So we had to subtract 26.4 to the interest. Why? Because the use of debt, okay, here, the use of debt provides a leverage for the company. That's why debt is oftentimes called leverage. Why? Because it reduces your taxable base, and then it will lessen your tax. So tax is lessened here because of the use of debt. Okay, that's why that's one of the reasons why the use of debt is important in the company, because there's tax savings here. The tax savings here is 26.4, right? This is the tax savings. Instead of paying 85.1, the company paid 58.7, a difference of 26.4. So therein lies the difference between NOPAT and NIAT. So of the 88, this 88, okay, only a portion, okay, only 70% the advantage will be an advantage for NOPAT, and 30% will be deducted because this will be for tax savings. Okay, so let me see why is 30%, guys? Because 30% is a tax rate. Okay, there's a chat here. How do you get the last row? Okay, the last row is, di ba, just subtract, no? Subtract lang. Earnings before tax less tax. Okay, so that's how we got the last row. Okay, I hope that answered your question. Armand, na-answer ba yung question mo? Okay, thank you. All right, so we can directly, if we know EBIT class, we don't need to go here. We don't need to compute for this one. We can just start with EBIT, okay, and use this formula, EBIT times 1 minus tax rate. In other words, from the EBIT, we deduct the tax savings to get your NOPAT. Okay, so let's get the EBIT. Let's get it from here. EBIT, okay, for 2021 and EBIT for 2020. And then we know the tax rate. The tax rate is tax rate. That's 30%. Also for 2020, the same. Therefore, our NOPAT will be using this formula, EBIT, and then we multiply it by 1 minus your tax rate. There. Control Enter. Okay. So NOPAT for, let's compare this with our net income after tax. So let's just write that. So for 2021, it was net income after tax is, let's just copy it from here. 137.1. And we can copy this. Okay, so you can see, class, that the NOPAT is higher than the net income after tax. Okay, and the difference is the tax rate multiplied by the interest expense. Okay, the difference between these two. If you get the difference is 61.6. Okay, and this is computed by the tax rate multiplied by the interest expense. What's the interest expense? Okay, it's already time. Let me just end this. Okay. It's 1 minus tax rate. Sorry for that. Okay. That's where we got the. Okay. All right. I think I have some questions here. Natasha, lahat naman na recordings, di ba? Na may kulang pa ba ako? Oh, ito yung video last November 8. Okay, I think all the videos have been uploaded. No? Okay, and also today, of course, we're going to upload it. All right, so it's already time, guys. I'm very sorry for the extended time. Yes, Rafi, you have any question?
Sir, put the question in the chat box also.
Okay. Anong question mo? Okay, Excel file. Okay, sige. I'm going to send this Excel file for the benefit of those who were not able to follow along. Okay? So
Thank you, sir.
okay, thank you. So next meeting class, we're going to finish this cash flow, free cash flow, and then we're going to look at ROIC, and then MVA and EVA. Okay, so those are the things that we're going to look into next meeting. Okay, so let me stop recording now.